190 points. Moving on to the United States, where stocks dropped last week to end off the week. The S&P 500 suffering its worst May performance since 2010. That is around 9 years. Now, after President Donald Trump's surprise threat, of course, on those tariffs to Mexico, that began to fuel fears that his trade war on multiple fronts, that's China, Mexico, the likes of Iran, the likes of Venezuela as well, could even lead to a recession, not just in the world number one economy, but across the globe. The Dow Jones Industrial falling 1.4%, S&P 500 1.3% lower there as well, and the Nasdaq Composite fell 1.5%, 7,454 points. Quick look at how the markets are faring as well. On the local front, you can see that things were a little bit more negative as well to close off trade out in Europe particularly. So all red across the board there, as you can tell. Even the CAC 40 is sitting down at 5,205 points. Continuing to take a look then at the market picture on the local front as well. It has been fairly negative, but it was a good close off to the end of last week. So checking in on how things are faring now is certainly going to be an interesting sentiment. Around 0.8% better off for the JSE All Share. So that market seemingly doing much better as well thus far. But as you can tell, they're sitting at 55,339 points, 68,364 for the industrials. Of course, no help there as Asia was sitting down. So that means Tencent was sitting down, which means Naspers locally has also not enjoyed the best of days. The resource counters there, as you can tell, there went down, but gold and platinum stocks seem to have headed fairly higher there on that front. Perhaps the diversified miners not doing as well as one would have hoped. Let's check in then on that commodities picture there. Gold sitting below that $1,300 a fine ounce, with platinum below 800 there as well. The oil price went as low as $61.09 a barrel earlier this morning, but it has weakened ever so slightly. And of course, that will mean great benefits for South Africa or non-oil exporting countries like ourselves, of course, because that just means we pay less with regards to things like fuel if our currency doesn't weaken any further. Quick look at that currency picture. 14.54, slightly better movement for South Africa's currency. 18.37 for British pound, and the euro there at 16.26. So let's chat about this now and how that market picture has flowed. Bright Khumalo from Vestact Asset Management joins us live from Johannesburg Stock Exchange. Bright, thank you so much for the time, but a bit of a mixed one, I suppose, going into last week, but to close off the month of May, they usually say sell in May and go away. It seems like that's exactly the sentiment we had then in that month.
Yeah, I never like those those kind of, lines that say, sell in May and go away, and because in the long term, you do worse by selling in May and then going away. But unfortunately, this year I had to, prove that statement true, and it's bad. I mean, the South African market wasn't, any an exception to this, because if you look at the first quarter, we were up about 6.5%. All the way to April, we were up at some point 11.3%. And then you look at where we closed, we actually just wiped all of those year-to-date returns, and we're still now back, to square one. So unfortunately, you would have done very well by selling in May and going away.
All right, so where then do we find sort of the impetus from here? Is it really still based on that trade war? Is that still the flavor of the month, if you want to call it that? Or are we now beginning to look at some key fundamentals perhaps and moving shares in the right direction? Because it feels like that has fallen away somewhat.
Yeah, the market was getting immune to the sort of, the normal China U.S. trade war, so that was the Sino-Donald Trump trade war. We're sort of getting used to that, there was a lot of certainty, if you want to call it that, but then Trump went back, to the drawing board and threw the spanner in Mexico, and then what's next? We don't know. He might not like that, the chocolates in Switzerland, and you might just start the trade war there. So we don't know what's happening next, and unfortunately, again, uncertainty, breeds a lot of volatility in the markets, and I always say volatility brings a lot of opportunities for us market participants. Some people see it as a negative. I like to see it as a positive, where you can acquire, the sort of the same good securities that are of good quality at lower prices. So this is, an opportunity to come look for some good companies at cheaper prices.
When you say quality, then you are talking about a fundamental, right? Where the business is going to search for growth, the right place
Yes.
that it invests in. How does one sort of know where that is right now in a time when the turbulence is all that seems to be making the headlines?
Just, look less on the headlines, focus, like you're saying, on the fundamentals. And usually good quality companies have always been the same good quality companies, that there were in the past 10 years. There's opportunities in the retail side of things. You've got ShopRite, Mr. Price, your Woolies, for example, trading at much cheaper prices than we've seen, in the recent past. You've got other companies, again, in the technology space. We're talking about Naspers, which hits, highs of 3,800 rands not so long ago, which is now, like I see, it's at 3,300 rands. It did go lower than that because of the exposure to Tencent. But, all of these gyrations in the market like this do provide, that opportunity, like I said, to pick up these good quality businesses at, cheaper prices.
Yeah, that commodity picture, predominantly speaking about oil, having dropped to around $61 a barrel. Not so long ago, we were speaking about $70 to $80 a barrel as a range. But now it seems that we're going to head a little bit lower then. This is good for us, not necessarily good for nations like Nigeria that perhaps need it most. But where is that oil price actually going?
I wish I knew where the oil price was going, but I like it where it is right now. I'd like it even better around the 50s because, South Africa has introduced basically a 9 cents carbon tax, and everyone was complaining that, this is going to add basically to our woes with regards to the oil price when it was higher. But now that it's lower, we're even talking about, the price of petrol going down, as well as diesel going down even further because of where the oil price is. So I'm liking this. This is good for the consumer. This is money that goes directly to their pocket. It's a direct savings, which means, they could use that amount that they would have spent on petrol. They would use it, that wallet amount, into something else, probably, groceries or something more productive than just, spending down on petrol, unfortunately.
Yeah, that certainly would be hopeful. If that rand maintains its stability, though, at 14.50, perhaps then we get that sentiment with that petrol price. But not so long ago, we were before 14 rand a share. Is it still perhaps overpriced at this level?
Sorry, you're talking about the
currency
the
that
rand.
is. The currency that is, yeah.
Yeah. Look, I still feel like the South African rand currently, on a basket case, it's still offering a lot of value. We could still go, even stronger than where we currently are. But I mean, it's still good for our exporters where the rand is, but it's not good for the importers. But if the current cabinet manages, to get those structural issues out of the way, we're talking about Eskom, SAA, and other parastatals, and slowly move towards the right direction, it might, it could, improve the business confidence, and then from there, consumer confidence. We're talking about hiring more, improving those labor numbers, and eventually we'll be headed to the right direction in terms of that, that economic picture, which will, improve our GDP numbers. As you know, that we're expecting numbers to come out tomorrow. We saw last year, for that quarter that ended in December, we ended at a positive 1.4%. We're not expecting that right now because, again, of those structural issues that I've mentioned, Eskom being the biggest one, because the first quarter is not going to look, that good as a result.
Yeah.
But if we do get those structural issues, right, it might be positive for South Africa, and we could be talking about, growth, something we haven't seen in a while.
Bright, thank you so much for the time, bud. Always appreciated. Great chatting to you. Bright Khumalo there, portfolio manager at Vestact Asset Management. Everything down. Vehicle sales, manufacturing, mining, all of it has gone down. So that means that for the quarter between January and March, you do expect to see that GDP number would have gone down. Estimates by Reuters and by Bloomberg are for around 1.5, 1.6% negative growth. So contraction in South Africa's economy between January and March. Where does that figure actually come in? We'll find out tomorrow at 11:30 from Stats SA. But for me, that's where the buck stops, and this is On Point.